My name is Jared Meyer, and I'm work for NinjaTrader in our Denver office. We have a very special event for you today. We have Steve Rhodes of Mastering Probability ready to give a great presentation. I do want to remind you that mention that it is important to understand that there are substantial risks in trading commodities, futures, contracts, and Forex. You should carefully consider whether such trading is suitable for you, and that will depend on your specific circumstances and financial resources. It is possible to lose all the funds deposited with your broker, and you could even incur losses beyond these amounts. Please inquire at ninjatraderecosystem.com/risk disclosure for more information or for a copy of the CFTC risk disclosure. This presentation is brought to you by NinjaTrader LLC, which is the technology company responsible for developing and supporting NinjaTrader trading software. Any brokerage-related questions should be directed to NinjaTrader Brokerage directly at area code 312-262-1289 or by emailing brokerage.sales@ninjatrader.com. And that information will be in the chat box here shortly as well. We are very excited for this unique event in which Steve Rhodes of Mastering Probability will share the 3 essential tools which garnered his success. His automated decision-making system, a NinjaTrader Market Analyzer, which shares the current market outlook for any instrument within any time frame, as well as proprietary patterns to identify tops and bottoms. Thanks again for your attendance today. Without further ado, it is my pleasure to welcome to the NinjaTrader Ecosystem webinar room, Steve Rhodes. Please take it away, Steve.
Jared, thanks for that introduction, and welcome everyone. You know, there's many things, but there's certainly one thing that I think that each of us here have in common, and that is that each of us enjoys self-development. Certainly that's one of the reasons you're here. And if I go back to the first financial investment workshop seminar that I attended, it was a good quarter of a century ago. And I can still remember to this day, I don't remember the guy's name, but I remember him standing in front of the audience and saying, you know, the secret to being able to make money is to buy low and sell high. And of course I said, hey, that sounds pretty easy, right? I mean, most of us have heard that, and most of us hear other people repeat that over and over again. It's simple. All you have to do is buy low and sell high. Now look, I don't want to burst your bubble, but I think that's the absolute worst advice that anyone could receive or anybody could follow. Bear with me for a minute. Let me share with you, let me take you back to the reason why I believe that's the case. On October 11th, 2007, the Dow closed at 14,015. 70 trading days later, the Dow was at 12,270. That was 12% lower. So if you think about it, buy low, well, that seemed like it was 12% lower. That should have been a good buy, right? Wrong. How about 190 trading sessions later? The Dow was trading at 10,962. 10,962, some 22% cheaper, right? 22% cheaper. Buy low then? No. Of course, you and I know that story because it's history. And the history showed us that 352 trading sessions later, the Dow had bottomed at 64.69, some 54% lower. Here's the actual chart. And the important thing is, and the reason why you're here today, and what I'm going to share with you today, is we're not interested in buying low and selling high. What I'm going to share with you today is a set of patterns that will help you buy a bottom and sell a top. It's a small little thing, but it's really, really important. What you're looking at here, and by the way, I've been a NinjaTrader user for well over a decade now. It is the primary tool. It is the tool that I've used that has helped me to garner that success as the #1 market timer as rated by Timer Digest. So on this chart here, and there's a pattern that we're going to talk about today. It's called the Rhodes Momentum Indicator Signal. And on my NinjaTrader application, it draws lines. It begins drawing lines when markets, instruments, whatever time frame it is that you're using, begin to show topping signals, as it did back in October of 2007. In fact, it was the week of October 19, 2007, when it gave a sell signal. Just as down on March 13, 2009, it gave us a bottoming signal. So what I want to be able to do and share with you today is I want to be able to help you to identify a bottom and identify a top. Now, one of the things I'd like to do is share with you some contact information. So you can reach me, if you've got questions, you can reach me at steve@tfnn.com. That's one way. For those of you that use Skype, you can reach out to me by Skype, steve.rhodes94. The 94 doesn't mean anything other than I believe I was the 94th Steve Rhodes on the Skype system. And I'll give you access to my cell phone, 407-383-3100. Don't reach me I'm on the East Coast, by the way, so try to just respect the hours, but reach out to me if you have a question. I'm here to help. With regard to a bit of housekeeping information, I'd also like to go through a legal disclaimer here, and that is that trading in securities such as stocks, options, indexes, currencies, and futures involve risk and should not be undertaken without due diligence and serious independent study. Options, stocks, currencies, and futures trading involve substantial risk. Subscribers and attendees of this workshop may carry out their own trading based upon what they learned from this workshop hosted by Steve Rhodes. However, all risks of potential financial losses are the subscribers, attendees' responsibility. TFNN, Tiger Financial News Corp, and Steve Rhodes will be in no way liable for financial losses resulting from trading decisions based upon this workshop or any other advice. Past performance is no guarantee of future results. Reproduction, whole or part, is not permitted without prior written consent. That is copywritten for 2018. All rights reserved. Now, one of the things that I want to share with you, and by the way, my newsletter signals, which is Mastering Probability, the folks at Timer Digest, it's a third-party organization. Many of you are familiar with Timer Digest. And if not, say a third-party organization that tracks the newsletter signals of the nation's best newsletter writers. And back in March of 2017, they began tracking my signals. Now, they track 3 signals. They track signals for the S&P 500, they track it for gold, and they track it for bonds. And they begin to report what each newsletter, they begin to report on you after they have 1 year's worth of data. The first time that they could report on me was this report here, which ended March 29, 2018. And you can see that I was listed as the #1 market timer for the 12, 6, and 3-month period, ended March 29th. I was also #1 for gold. Now, the reason that I bring that up is because the tools that I'm going to share with you today are the exact tools that I used to garner that success. If I did it, you can do it. There's 3 other things I'd like you to know about me before we get going here. #1, I'm a bean counter. By trade, I've been a licensed CPA in the state of Florida and the state of Michigan for the last 37 years. I moved down to Florida back in '80. In fact, I'm coming to you live from Delray Beach, Florida. For those of you not familiar with Delray Beach, it's on the East Coast, kind of wedged in between Palm Beach and Boca. It's a great beach community, beautiful environment. That's #1. #2, I'm an entrepreneur. I previously owned retail stores at Disney, Disneyland, Universal Studios, pretty much every major theme park and tourist destination around the world. In fact, most of you have seen or maybe have purchased one of my products. Third, I'm a newsletter writer and I do a financial talk show. The financial talk show, it's called The Trader's Edge. It's hosted by Tiger Financial News Network. You can go to the YouTube channel. You can type in Trader's Edge, Steve Rhodes, TFNN, and you'll see about 8,000 videos that pop up. In fact, if you want to look for a specific video, just simply go ahead and type in the date. If you wanted today's, you would just simply type in July 19th, Trader's Edge, Steve Rhodes, and you'll be able to see the archive of that video. The areas that I want to cover today are the 3 tools that have helped me to garner that success of the #1 ranking by Timer Digest. The first one being the Rhodes Momentum Indicator Signal. That's the tool that we just looked at that helped to identify the top in 2007 and the bottom in 2009. The next one that we're going to take a look at is what's called Stevie's Red Line. That's the Oscillator Unchanged line. The third set of tools that I use are the TAS Market Profiles. Now, as everybody was filling out the information that Jared was asking about as far as familiarity with NinjaTrader, what I've also done, we're going to take a look at some screens, we're going to take a look at the actual tools and how they work, but my subscribers are varied. Some subscribers just simply want to have the confidence and they want to have the trust in the signals that are generated. And therefore, what they're really looking at, what they'd really like to understand is the instrument that they are invested in, or the instrument that they want to invest in, is it bullish or is it bearish? Because really, with regard to what it is we're going to take a look at today, I want to be able to show you how to identify tops, identify bottoms, and I want to teach you how you can go ahead and add to your positions. In other words, you want to buy something when price is moving up, when it is in a bullish mode. And so what I've done is I've taken the logic that led me to become that #1 market timer, and I've built it into a market analyzer. Now, this is the market analyzer tool inside the NinjaTrader system. I have built this so that it allows us to answer that question for multiple time frames. You may be a long-term investor, and therefore the decisions that you would make with regard to your investments or your decisions, you might be focusing on just simply the monthly time frame. Maybe you would be taking a look at a weekly time frame. Maybe you're more of a swing trader, and what you want to do is you want to focus on a daily time frame. So what is listed on this table, on this market analyzer, the one that we're looking at right now, shows you on the top, and by the way, this was a snapshot from probably about 2 to 3 weeks ago, and we'll go ahead and take a look at some updated tables before we're done here. But you'll see at the top it takes a look at the ES Mini for the S&P, so that's what subscribers and I look at each morning. We take a look at the gold contract. We take a look at what bonds are doing. But this also shows us what were the index ETFs, the index ETFs that most people would trade here in the United States, the diamonds, the Russell 2000 via IWM, or the Qs or the SPYs, or maybe you trade a double or a triple, but you want to be paying attention to what's going on in the single ETFs, as well as what's going on inside the S&P 500. Sector rotation. This tool here will show you what's going on from a sector rotation inside of the S&P 500. So NinjaTrader, it's an amazing product. I encourage everybody to utilize it. They have extraordinary tools and everything that I've truly, without NinjaTrader, I do not believe I would have been able to have attained that #1 ranking out here. But look, the market analyzer, as I mentioned, it works for all instruments in all time frames. Some of you might be traders that are looking for intraday signals. So subscribers get to see the intraday signals for various instruments. These are the future contracts. So we can take a look at the equity futures contract, the ES Mini, the NQ, the Dow, the Russell 2000. Maybe it's metals that you're interested in trading. Maybe it's gold or silver or platinum or a copper. Or maybe you're just interested in oil and gas. Maybe you're taking a look at light sweet crude or natural gas. Or maybe it's the grains. Or maybe it's currencies. Here you see same logic that led to that #1 ranking. And we've broken this down based upon what's happening on an hourly basis, what's happening on a 2-hour basis, a 5-hour basis, a daily. And what I also show is I show different levels of support or resistance so that you know ahead of time where is it that's something that's pulling back, where's the support level, as well as things are moving higher, does it have resistance? Some columns will show no resistance, meaning there is no resistance at sight at the point in time that this was created, as well as my Rhodes Momentum indicator signals, showing you for multiple time frames out here. So short-term and day traders, and I like to refer to this system as Bob. That's my nickname for it because it really is telling you bullish or bearish for the instrument that you're trading. If we take a look at wealth portfolio managers, many of my subscribers manage money for others, and what they want to do, and for many of you that might trade not trade, but have investments for your long-term portfolio, you're looking for some type of mix between U.S. equities, foreign equities, fixed income products, real estate, master limited partnerships, dividends, commodities, and so forth. And so here, we are able to take a look at the Bob signals so that you can properly manage your money. As this snapshot was taken a few weeks ago, where you didn't want to have your money was in the foreign equity area. And what this system will do, what this system does for you, what I do for subscribers each day is provide this data so that they can go ahead and make changes to their portfolio. Some folks, for example, a lot of subscribers of mine like to trade the gold market. Now, let me let you in on a little secret here with regard to the gold market, if that's something that you like. When gold begins moving to the upside, what you will find, you can go back and test this yourself, but what you will experience, what you will find is when gold begins moving to the upside, and it's going to have a big move, the mining sector will outperform gold. That's right, the mining sector will outperform gold. Now, inside the mining sector, and these are the majority of the components inside of the GDX, so that's the one-time ETF for the mining sector. Inside there, you have a number of different instruments. Some are outperforming others. So if it's at the beginning of the move, the question is, should you invest in the ETF or should you be looking for the strong stocks? Well, look, I gave you both options. You get to see which stocks are bullish or in a consolidating mode, which stocks are bearish. In this case here, because these stocks in essence are trading for 6.5 hours. So the only two time frames that I think are really worthwhile are taking a look at a 30-minute time frame or taking a look at the daily time frame. And again, I provide the support and resistance levels, which ones are generating topping or bottoming signals out there. Bob warns us, as I said, our bullish or bearish system warns us of tops or bottoms by showing us our Rhodes Momentum indicator signals. So what's the Rhodes Momentum indicator signal? First, this is a pattern that has been present before the beginning of every bear market during the last 130 years. A new subscriber to Mastering Probability yesterday, some emails going back and forth. And if you send me an email, I'm going to ask you the basic questions and try to understand, which is, why did you sign up for the newsletter? What is it? How is it that I can help you? Or how can the newsletter help you? Tell me a little bit about what you're looking for. What is it that you trade? Are you a trader? Are you an investor? Are you using the newsletter for long term? And Carlos, that was the individual we were trading emails back and forth. One of the things that he said was, I'll tell you what I really want. What I want to really do is avoid the next bear market. And I said, well, then you have found the right home. And the reason is because this proprietary tool and indicator that I built, the Rhodes Momentum Indicator, has been present before the start of every bear market during the last 130 years. What we just looked at was a signal from 1929. When we began the show, we took a look at the signal from October of 2007. Before the 1987 crash, and I'm not saying that when this signal presents itself, it's identifying a crash. What I do want to say is that tops are formed certain ways. Before the 87 crash, an RMI signal was warning the bulls. It was the week of August 28th that confirmed the RMI signal, well before the crash. Now, before the top in 2000, you and I looked at the 2007. This is taking a look at the Dow chart. And by the way, my Dow data goes back to 1850s, 1860s out there. So that's how I know that this has been a pattern that has been present for the last 130 years. Before the 2000 top, before the 2007 top, a Rhodes Momentum indicator signal was present. And here's the beauty of it. It works for all instruments, and it works for all time frames. This happens to be a 5-hour chart for the NASDAQ futures contract. This is the chart from 2018. And each of these arrows show you signals that have identified tops and bottoms. Now, this is a chart from a few weeks ago. I'll show you the live chart, which is giving us topping indications inside of the market. So it works for all time frames. It works for all instruments. Now, the RMI signal, it's a proprietary 5-step pattern that I teach the subscribers of Mastering Probability. I want to be able to teach it to you as well. And so what I've done, because in a 30-hour segment, there's no way for me to be able to provide you with all the information so that you can go ahead and learn this pattern. But I want you to learn this pattern. I'm here to help you be able to learn this pattern. There's an easy way to do it, and it's risk-free. All you need to do is sign up for Mastering Probability. You can click here. You can come over to the Mastering Probability website. You can come to the Tiger Financial News website, and you can sign up for the newsletter. And you have a money-back, 30-day money-back guarantee, no question asked refund policy. So you can get this information. You will, as soon as you sign up, you will gain access to a 1-hour workshop that shows you the exact 5 steps for this pattern. So whether you're a NinjaTrader user, whether you just want to understand the signal better, you come over to Mastering Probability or you click right here and you gain access. You're also going to go ahead and get access to a 90-minute money management workshop. Now that 90-minute money management workshop is going to be all about position sizing. If the term position sizing is new, you really want to, because it's all about risk management, so you'll really want to go through that 90-minute workshop. You're also going to get access to another workshop, which is called Stevie's Red Line. It's the Oscillator and Change Line. We're going to take a look at that in just a few moments. You'll have direct access to me via Skype, via cell, via email. I want you to be able to learn this pattern so you can do it risk-free. I'd like to be able to teach you this pattern because when markets form tops, what I want you to know, it's not the first high that matters. Now, what I mean by first high is where these signals begin getting drawn. So if we take a look at where my cursor is at, you'll see these black diagonal lines. I'm on the left-hand side of the chart. You'll see these black diagonal lines. I hope you can see my cursor. I think that you can see my cursor. But over on the left-hand side, you'll see a candle where lines begin drawing from lower left to upper right. It's not the first high that matters. It's the second high and the relationship between time is important, price, and its relative strength reading out there. When markets form bottoms, just the opposite. You can't see the cursor. I think there's a, thanks for letting me know. Here's a drawing tool. There we go. So right here, there's the, I'll point to the high. Here's the first high out here. So there we go. Let me point to the first low. Hey, I'm just new at drawing out there. So I said I was a bean counter. I didn't say that I was an artist. Although I do think I've been able to take this NinjaTrader software and create some really cool artistry from it. So it is that first high that matters, and it matters because it can mark the beginning of the Rhodes Momentum Indicator. What really matters is the second high, this one right out here, and it's a process that is dealing with time. This is the proprietary system. This is what I'll teach you in the 1-hour workshop. It has an element of time, it has an element of price movement, and it has an element of the relative strength indicator. And that is how the Rhodes Momentum Indicator identifies tops and bottoms. All different time frames, all different instruments, and so it'll work for you to help give you that early warning for Carlos that wanted to avoid the next bear market. Unless this time is going to be different, and I don't think that it's going to, we'll see a Rhodes Momentum Indicator signal before the beginning of the next bear market. Now, look, each of us have some type of market bias. It's not a bad thing, but when I'm long an instrument, I'm always looking for the other side of the trade. When I'm short an instrument, I'm looking for the other side of the trade. So I like to put up this little graphic here. I said I wasn't an artist, but when you take a look at this image, what do you see? Do you see a young or an older woman? Which one do you see? Many of you may have seen this in the past. If we take a look at, and I'm going to go ahead and use this drawing tool, I'm going to go ahead and try and show you the older woman. The older woman, this area here is her nose. This area right here that I draw is her chin. This area that I draw in right here is just simply her hair. This other white area here is nothing more than a scarf. Do you see the older woman? Maybe it's easier if I go ahead and I break this picture apart. So I've broken this picture apart, but in breaking this picture apart, usually it's easier to see the younger woman. In fact, just try to block out all of this area. You know, almost take your hands and just block this out. If you can block that out, then what you can see on a younger woman is this area is her chin. Here's her chin right here. And this turns out to be her hair. You can see her ear right here. And then you can see her eye and her little nose. So the point is that whether you're bullish, whether you're bearish out here, and how do I clear this off? I think if I double click, does it clear it? No, it doesn't clear it. Son of a gun. I don't know how to clear this. I don't know how to clear this, but that's okay. I've really kind of messed up the image in the picture. But the real point that I want to make, there we go, it cleared it up. But the real point that I want to make is that what the Rhodes Momentum Indicator Signal allows you to do is be in the trade to the bullish mode, and it will make us aware when there is a potential for some type of change in trend out there. And that's really what's important. The current status of the Dow, and if I give you an updated chart, it's not going to be substantially different than this. As it was making its high back here in January of 2018, it did not have a Rhodes Momentum Indicator Signal. Now, there are going to be false readings out here that I have over here on the side, and you'll be able to see that, and that's what the 1-hour workshop will teach you about. So just come on over and sign up for Mastering Probability, and I'll be able to walk you through all those details. Now, look, folks, there is going to be another bear market. You see, since 1900, so for the last 100 and some odd years, we've seen 34 bear markets, about one every 3.5 years. And in the last 70 years, there have been 14. So they've kind of gone from one every 3.5 years to one every 5 years. And corrections, by the way, over the last century, we've seen those about one every year. In fact, we just experienced a correction. We experienced that between, depending on which indice, and the Dow began in the S&P in January. In the NASDAQ, it began in March. So we've had our correction. That's really just on schedule. And we are going to have another bear market, but we don't have bear market conditions right now, not at least based upon the Rhodes Momentum Indicator Signal, and it will spot the next bear market. So here's what we've learned thus far. I incorporate 3 tools for timing the markets. One of those, which we spent a bit of time on, is the Rhodes Momentum Indicator Signal. It spots tops and bottoms for any time frame, whatever it is that you trade. Every bear market during the last 130 years has been preceded with a Rhodes Momentum Indicator Signal. The signal is a 5-step process. And if you sign up for Mastering Probability, you have no risk, 30-day money-back guarantee. You will get access to a 1-hour workshop that shows you the exact 5-step pattern. It is not a stochastic pattern out there, Jordan, but you will get access to the exact pattern that I use that has been present before the beginning of every bear market. So let's go take a look at what I like to call Stevie's red line, the oscillator unchanged line. And this is another essential tool for being able to time the market or understand the outlook for the market, bullish or bearish. Now, an oscillator unchanged line it ends up on my charts, on my NinjaTrader charts, for the most part, as just simply a red line. And the basic process here is if price is above the red line, it's bullish, and if price is below the red line, it's bearish. This happens to be a monthly chart, so it's another tool to tell you about the outlook or the nature of the market that we're in. The oscillator unchanged line lets us know whether the price oscillator is rising or falling. So a rising price oscillator, that happens to be the bottom panel of the screen, and I'll tell you exactly the definition of what a price oscillator is. But just to understand, a price oscillator that is above zero, so just take a look at this indicator, a price oscillator that is above zero is bullish. And a price oscillator that is falling below zero is bearish out there. Let me give you some more details about it. What is an oscillator? An oscillator is the difference between two things, two levels of energy. When we take a look at a stock chart or the charts that I'm sharing with you, a price oscillator is the difference between two moving averages. But let me be specific here. A price oscillator that I use is the difference between two exponential moving averages. On a chart without price, here's my NinjaTrader. I just simply turned off price, or I went ahead and I hit it. I'm just showing two moving averages in the chart area. And the bottom panel is showing the difference between those two. Now, the traditional view would take a look at it like this. You'd see the exponential EMAs, you'd see price, and you would see the price oscillator on the bottom panel of the screen. What I use is a 19 and a 39 period exponential moving average. I use 19 and 39, whether it's a monthly chart, whether it's a 5-hour chart, whether it's a 30-minute chart, whether it is a daily chart. Those settings stay consistent. When the 19 and the 39 period exponential moving averages cross, what happens is it tells us that the price oscillator is at 0. You'll see 4 different arrows on my screen, each showing where the cross took place in the price area, and the price oscillator, which is at the bottom. Now, the price oscillator that I'm using to calculate this, you can do it too, is the MACD tool that comes with NinjaTrader. Now, many MACD tools on their software packages use simple moving averages. It's very important that you use exponential moving average. Well, it's important if you want to follow along the tools that I use that have helped me to garner that #1 ranking in the S&P 500. And by the way, I'm number 3 in bonds. That's as of June 30th out there. But if you want to use the same system that I use, you can use the MACD tool. That is what the line is at the bottom. That is the bottom indicator here. It is the MACD tool. There's a reason that we use exponential moving averages, or there's a reason that I use exponential moving averages. And it is because it is rocket science. It's rocket science because of a guy named Peter Harlan. Some of you may know Peter Harlan. He really developed what has become exponential moving averages. He didn't refer to these lines as exponential moving averages. He referred to these as trend values. In fact, he used to write a newsletter, this goes back many, many years, called Trend Values. Now, what Peter's role was, he was a rocket scientist, worked at the Jet Propulsion Laboratory, and his job was to basically get the satellites that were back in the sky into their proper orbit. And he was using these 2 exponential moving averages in order to be able to do that. They were called, in essence, 5% trend and 10% trend. They were representing the 19 and the 39 exponential moving averages. For those of you that use the McClellan Advanced Decline Oscillator, that is using the 19 and the 39-day or 39 period exponential moving averages as well. A price oscillator that is above 0 says don't be short. Now, what I mean by that is if we take a look at Stevie's red line, this is referred to as the oscillator unchanged line. And what that really means is that's when price would be going, when price is sitting right on it, it tells us that the price oscillator on the bottom of our screen is going completely sideways. When price is above it, above Stevie's red line, the oscillator unchanged line, and the price oscillator, the difference between those 2 moving averages is above 0, it tells us you are in a bullish condition. In fact, any retracements that come back and test and reject that oscillator unchanged line, Stevie's red line, is nothing more than a test of support. And you can see how well this works. Now, we use this in combination with other tools out there. Likewise, in a market where you have a price oscillator that is falling, and especially a price oscillator that is below 0, such as in the lower left-hand side, right around the June 20th type time frame, that's a type of market that says, okay, I don't want to be long, especially if you're taking a look at what the trend is telling you. So a falling price oscillator below 0 says, hey, don't be long, as the red arrows on this chart show you. Now, look, there's more details about the oscillator unchanged line, and I don't want you to think that this is a workshop here where I'm not going to provide you with all of the exact details as to how these tools are used, how they are formed. That is not the case. I will never give a workshop like that. So if you sign up for Mastering Probability, again, you're doing it risk-free. There's nothing out of pocket other than putting out a credit card at the moment, and you can cancel it 29 days from now, and you will have garnered an education that is the educational tools that have used by the guy that's been able to attain that #1 ranking. There's a workshop. If you sign up right now, it'll be on your members page. You'll get the oscillator unchanged line. It's another 60-minute workshop. It'll show you exactly what to do. So you will be able to learn, and in what we've covered here is the price oscillator measures the difference between 2 moving averages. We use exponential moving averages versus simple. When the price oscillator is rising and below the 0 line, when the price oscillator is rising below the 0 line, it may be just simply more. It may be simply nothing more than a counter trend rally. When the price oscillator is rising and above the zero line, a strong bullish trend is likely underway. So we've covered these things, and I'd like you to be able to really fully understand and be able to plot this on your chart, because it will assist you in your trading and investing decisions. Now, the third thing that I use are market profiles. The ones that I use come from the company Tazz. So I refer to them as TAS Market Profiles. And these provide us with horizontal levels of support and resistance. So to identify support is going to be the bottom of a profile. I refer to these as boxes. You're just looking at 3 horizontal lines. What it doesn't have is a left side line. If I draw that in here, in essence, is our left side line. Let me see if I can draw here. Will this let me draw? Try this tool once more here. So here's our left side of the box. Here's our right side of the box. And what this tool allows us to do is tell us where the tug of war is from a price standpoint between bulls and bears. Support is going to be the bottom of the box. Resistance is going to be the top of the box. Once you break above resistance, you have a breakout that is underway. Resistance being the top. The center line here lets us know where both buyers and sellers believe that there is fair value inside of this price range out here. Now, the interesting thing about market profiles is the center of the box has a lot of meaning as it relates to where it is positioned. Proximity is everything. Where it is positioned in relationship to the top or the bottom of the box. A center line that is closer to the bottom of the box, such as the one down here. See if I get this tool working again. So this line right here, that center, is closer to the bottom. This tells us that in this price area here, this is a very strong bullish profile. This is a bullish structured profile. Likewise, up at this area right in here, this would be a bearish structured profile because the center line is closer to the top. Now what that means is that if price is able to take out a bearish structured box, there's nothing more bullish than a move above something that is a bearish structure. So how do we use these? It's very simple. We can identify bullish moves using these market profiles. This is showing us the ES Mini for a 5-hour time frame. Because as price is taking out resistance, what will happen in bullish moves, price will take out resistance but won't take out support. In bearish moves, what we will see is price will begin trading below support, the black dashed line, and won't take out resistance. Now, I always have a 2-bar rule. When one area gets broken, I wait for another bar in order to confirm that, similar to what we see right here. Similar to what we see right here. So the TAS market profiles are hidden levels of support and resistance. And all of this is included inside the daily newsletter, inside the charts that we take a look at, and inside that Bob system. So 30 minutes is just simply too short of a time frame for me to be able to walk through all of the details of each of these tools. But if you do sign up for Mastering Probability, I promise you will get every single tool that we just covered and exactly how to go ahead and use it. And don't forget, you're going to also see Bob in work because I want to be able to keep it simple for you. So we make it easy. Now, what I want to also do at the moment is I want to go ahead and just, and we'll go ahead and take some questions and answers, but I do want to show you where it is that we are inside of the market right now. Because I mentioned with regard to a couple of different instruments. Here is an updated chart. When I say here it is, first I have to share my screen. Here is a updated chart for the NQ. And on the NQ here, this I'm just simply showing a bar chart. And when you take a look at the arrows that we have up here, I want you to look in the upper left-hand side. So I'm just simply going to go ahead and delete this one, but take a look at this. You can see these signals. So as bullish as the markets appear to be right now, knowing that in 2018, these signals have helped to identify the tops, as we take a look at on the left-hand side, look at the bottom down around February the 7th, February 9th. Take a look at the high out here in March. Think of how bullish folks were there. Think of how bearish people were in April, down around April 3rd. Think about how bearish people were around April 24th. And so if we take a look at the bullishness that is inside the market, remember, we each kind of see what we want to see. What I want to do is I want to say, what are the signals that work? What are the patterns that work out here to make us aware of what is is taking place inside the market. So there's a signal for the 5-hour time frame. From here, what needs to occur so that you know what to look for tomorrow morning to indicate whether or not there's a top in place? And that's the following. Here is the daily time frame chart. Remember we took a look at the oscillator on change line? Now this price oscillator is above zero. I don't have the bottom panel here to show you, but just please trust me, the price oscillator is above zero. What we have seen over the past couple of, here on this trading day, I believe that was July 10th, a few trading days ago. If we take a look at maybe 4 or 5 trading days ago, if we take a look at 2 trading days ago out here, you can see how price came down and it's tested the oscillator on change line and bounced off of it. Still very bullish conditions. So right now, you've got the NQ trading at 73.67. If price closes below, let me see here. Can I get access? It looks like it's about 70. I want to give you the exact number. So let me get my data box out here. Show the data box. It's on, well, I'm going to put it on this screen right here so you can see it. So the number is, you see where it says OSC on my chart? Hopefully you do. I'm going to tell you what that number reads. 73.61. It says 73.61.43. If you see tonight, tomorrow, you see a price that is trading below 73.61, what this is telling us is that the 5-hour time frame chart that we just looked at that shows us the topping signal suggests that there is a further retracement and further pullback. Now what you would need to see tomorrow to confirm that is an actual close below that oscillator and change line. Stevie's red line out there. So, and the other thing is, here is current conditions. Now, let me just turn this off here. Here are current conditions for 2 instruments. One is the NQ that we were taking a look at. The second, and I just want to make you aware, that gold, even though it has gotten the snot kicked out of it, on a daily basis, on a daily chart, you can see that it is beginning to try to form that Rhodes Momentum indicator bottom. It's beginning to form it. That does not mean that it has formed it. I don't have that chart handy right now, but certainly it's something that I'll be covering inside of the newsletter. So I hope that, first, I really appreciate you being here for the presentation, allowing me to share with you the 3 essential tools that have allowed me to be able to garner that success. And I'd like to be able to assist you in your trading and investing as well. So if there are some questions right now, I'm going to see what I can. Michael H. asks, is this archived? The folks at NinjaTrader are going to go ahead and send out a link for an archive of this so that you can see this over and over again. I believe they'll do that sometime tomorrow. Jordan G., it is not a stochastic indicator that we're looking at. The site to sign up, you can go to tfnn.com. T as in Tom, F as in Frank, N as in Nancy, N as in Nancy.com. You can go to masteringprobability.com. There will be a link there as well, and that'll take you to the sign up for that. How did I settle on the 5-hour bar? What do you use for the next faster time frame? Scott, you can use any time frame that you want, and once you learn this tool, you'll see that it works for any time frame. It works for a 2-minute time frame. It works for a 10-minute time frame. 5-hour time frame is kind of like what I'm always looking for in the markets. What I'm always looking for, especially in the equity futures market. So it's the equity futures markets that are going to give us the best overall indication as to what is going on. And the reason is because we've got 23 hours worth of data versus 6.5 hours worth of data. And my tools will work best, not exclusively, but they will work best when you have more price discovery. And so what I'm always searching for is kind of like a surfer. I don't know if any of you guys are surfers, but imagine you're on a board, and what you're looking for is you're looking for those waves. You are looking for those waves as they are coming in, and those waves will change. Those patterns will change. The reason that I built Bob, the bullish or bearish signal, and why I built into it the Rhodes Momentum indicator is because I can put any time frame I want in there, and it will automatically notify me when those signals exist out there. This is a set of indicators to use in trade. These are my own personal indicators out there. But if you sign up for the workshop, you're going to see exactly what I use. I don't hide anything. it'll all be out there with regard to what it is that I'm using. Have I back tested my indicators? Yes, I have back tested the indicators, but look, this is not about me trying to sell you on a specific time frame or an instrument or how. If you want to improve your trading, I think the best way to do it is I've used a third-party organization, Timer Digest, to track my market signals. To me, that was the best way to be able to prove to you or anyone else the success of these signals. These are the signals. There's a few other patterns and things that I can share with you. I do that with subscribers all the time. But these are the signals that have led to that market timing out there. So I think that is really the best. That's the most important thing that I can do is to provide you with confidence and trust. It's the same way that I was able to get the retail stores at Disney and Disneyland. You know, I owned a store, I don't know if I mentioned this to you, at Walt's Disneyland Castle, his castle. I'm only one of two people that I know that was an owner-operator of a retail store of that Disneyland Castle. You can imagine the type of trust and confidence that Disney had to have in order for that to happen. You know, I believe in a philosophy. The way you do anything is the way you do everything. And I know that that applies to each of you out there. So you can utilize these tools. You'll find a way to utilize these tools and see just simply how well they work for you. Dave Bauer, what does top confirmed in red for the Qs mean? Was the current day today? In the charts that we were taking a look at, those were from 3 weeks ago or so. And the real estate sector indexes, Glenn, all of that was for weeks ago. If we, I know that I'm kind of running late here, but they haven't pulled me off of the screen just yet. So I can, as soon as I get that hook though, you know, I've got to go. But let me do this. Let me do this for you because I can give you a. See if I can give you a bit of a update here. This would be as of earlier today with regard to equities and foreign equities and fixed income. I don't have the, other than the IYR for the U.S. real estate area here. This is all I have. Here's maybe a better. Here's maybe a better view. Again, this was from earlier this morning in taking a look at your typical mixed portfolio for your longer-term assets, well, for whatever time period it is, because if it's a daily time frame that you want to use, you've got the daily, weekly, and monthly outlook. And here you can take a look at 2 other ETFs for real estate. You can take a look at the master limited partnerships. You can see what's going on in foreign equities, fixed income. You can see what's going on with regard to U.S. equities. Here, take a look at it like this. Basically, you're looking at the U.S. equities, and now take a look at what's going on worldwide. Here's what's going on worldwide. That's in this top section. So you can see right now what's going on. Where money always has to be parked somewhere. Money always is being parked somewhere. And when you take a look at what's going on around the world with regard to my signals, Bob's signals out here, Australia doesn't look too bad. You're in a breakout bullish mode on a daily. You're in a consolidating weekly bullish mode, and you're bullish from a monthly standpoint. When you start taking a look at Brazil, you start taking a look at France, China, Germany. You know, you can see the reason that one of the reasons that the markets in the U.S. are so bullish, and here this represents 4 of these markets out here. And yes, there are some topping signals, is because we're just simply in big bull. This is where money is flowing as we speak right now. So hopefully that helps you. This is the most current Timer Digest ranking. They just did their mid-year synopsis for Timer of the Year, and I've been able to pull up to number 3 on the bond side of it. So lots of questions. We watched you back to. I think maybe I've gotten to pretty much everything here, at least as far as I can get down to. So, look, you have access to me. I'll make sure that I put that up again. Let me get back to that slide if I can. How do I do that? I think I just click here, and let's see if this comes up. So you've got access to me. My email is Shoot, how do I do this here? I think you're seeing my slides right now, and hopefully you are, and my contact information. But let me give it to you again. It's steve@tfnn.com. If you've got some other questions, feel free to send me an email. You can get me on Skype, steve.rhodes94, and my cell phone, 407-383-3100. So, and I really appreciate the attendance, everyone out here on this, and I'll just simply look forward to helping you out. So, Jared, I think that really covers it, unless I don't see any other message. But I think that we're good. So, folks, thanks so much for joining us. Have a great day, and I'll look forward to seeing or speaking to you sometime soon.
Excellent. I want to give a special thank you to Steve Rhodes of Mastering Probability for a great presentation today. Everyone in attendance here today will receive an on-demand recording of today's event, so please look out for that in your email tomorrow afternoon sometime. NinjaTrader Ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. If you find value in these events, we hope that you will attend them on a regular basis. Quick note, we would like to remind you that the information provided in this presentation was that of Mastering Probability and not of NinjaTraders. All information was for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spent with us today. Please enjoy the rest of your day. Hope to see you again in future webinars. Happy trading from all of us here at the NinjaTrader Ecosystem.